Threatening to impose a 25% tax on all products from Mexico and Canada and an additional 10% on goods from China. US President-elect Donald Trump lays out plans against the country's top three suppliers that could see prices for American consumers rise sharply. He made the announcement on social media, typing that it was because of the thousands of people pouring over the borders, bringing crime and drugs into the United States. Well, to look at the potential financial impact of those taxes and tariffs, indeed the impact already being felt, we can cross now live to Jameel Ahmad of GTC. Jameel, reactions there to Trump's latest announcements?
Not a surprise. This is Make America Great Again version 2, and the second season is going to start with a bang. There's no surprise at all. We always expected that America First policies would come into play, that would have more protectionism, and he promised more tariffs. It just happens to be now there's a verbal promise that is going to begin on his first day in office or from the moment that he's inaugurated, depending on which way you look at it. Generally, we expect for this administration and its America First policies to mean more of the same as what we saw between 2016 and 2020, where the US dollar was stronger based on safe haven appeal, and it was the investor choice of an asset to hold. Trade tariffs and protectionism also have that hand. At the same point, we have to be fair, the American economy between this period did extremely well, and some of the momentum continued after COVID. So generally, from a US perspective, it's more insular stance, more America first and America focus. Globally, it's not so good for world economic momentum and so forth. But we expected this during the campaign, and we're not surprised based on the election outcome that this is what's coming to fruition.
And just before we leave you, Jameel, what other market trends should we be keeping an eye on?
We've had a roller coaster day when it comes to different asset classes at the beginning of the week. Gold prices suffered its steepest losses in roughly 4 years on a daily basis. That followed reports that hopefully there's some sort of ceasefire agreement between Israel and Lebanon, and those losses in gold accelerated after this news towards $100. We do have to say here that maybe it provides some perspective that the unprecedented year we've had in gold prices, where we've reached all-time highs and all-time highs, perhaps some of that appeal is because of geopolitical tensions. We always said there's been a mixture of different reasons towards why gold has performed so well, from low interest rate policy to concerns about the global economy, geopolitical tensions, some issues with the China economy and so forth. But yesterday's move and that sudden fall does suggest that investors are also hedging on geopolitical tensions, which is why we have to watch those events in the Middle East very closely, as well as what's taking place on Eastern Europe. And investors should not take this away from the radar based on this Trump tariff news.
Jameel Ahmad of GTC, thanks very much indeed.